On guys, it's your boy Trillionaire Mac. Welcome back to another YouTube video. So in this video, we're going to be breaking down EURUSD during London session this morning. Okay. Before we get started, make sure you subscribe to the YouTube channel. Let me know if you guys have any questions on the markup at all. Most of you guys continuously contact me if you have any questions as it relates to any of our previous markups. So please don't hesitate to contact me if you guys have any questions about this one here. So we're going to be discussing two trades. Two possible entries during the York session. This one here, okay, as well as this trade here. All right. Now these were both counter trend trades. Going against the higher time frame. I was looking for the buy position. We ended up buying, as you guys can see, but we just never came back to our entry, which we could later on. It just depends. So there was no reason for me to send this out to the group because, like I said, we did not end up coming back down to our actual entries. But no harm, no foul. It happens sometimes. And we'll just be waiting to see what price does, for the next couple of hours as we move towards London session and things like that. But these two trades, these two counter trend move sells took place this morning. If we start on the H4 time frame, okay, you guys can see that that we pushed up into some type of supply right here. You can better see this on the M15. Really, I use the H4 as my overall direction, right? But I use, like on the daily, we're bullish. On the H4, we're only bearish because we're in a bullish higher time frame pullback, okay? And then on the M15, of course, we are bearish from H4 expectational order flow for the pullback on the daily time frame. So it's really all about correlating all of your time frames together, right? Like on the daily time frame, right, we're pulling back. Right, we're bullish. On this right here is the H4 time frame, which looks like we're bearish. Okay, and then if this is the H4 time frame, then you know the M15 is going to be doing all sorts of things. This, up, down, right? It's going to be doing that. So that's kind of like the idea that we're playing off of. We're looking to buy here on the H4 or on the daily. Right, so on the H4, we're looking for price to continue to push to the downside until we get to this daily demand zone for us to look for possible buys, right? And the demand zones that I talk about, you guys can look at them as order blocks. I get questions like that all the time. Hey, can I look at, your supply and demand zones as order blocks, things like that. All of my supply and demand zones are going to be liquidity points of interest, which means that by default, they are going to be, technically speaking, order blocks, right? But it's really just supply and demand. Like if you focus on trading just supply and demand, you're going to be set, okay? So we see through London session, we had this nice push to the upside. We tapped into our liquidity point of interest. Okay, why is this a liquidity point of interest? Because we look to the left, mitigate something up here, okay? Does it grab liquidity? Absolutely. Is it responsible for a break of structure? Absolutely. Right? So we know that there's a lot of liquidity resting here. There's no real reason for us to go to the M5. It's not like we're trying to take a trade off. Well, we did go to the M5 here. But it's not like we're necessarily trying to take a trade, a risky entry by setting a limit here. Okay, that's where a lot of people go wrong. What I like to do is I like to go to the lower time frame. I like to use my two-step entry method that all of my students learn about, and that's how I like to take entries. So on the 1 minute time frame, there was an entry that presented itself on the 1 minute here. All right, we had a reaction to the demand resting within this area. Price pulls down. We couldn't break that. All right, we had a failed reaction. All right, then we pushed to the downside. All right, and finally, traded through price. Now, what I was really looking for, let me show you guys. It looks like my markup is slightly different. I marked this up on my laptop, and it looks like it has not corrected itself. So we'll just change this really quickly. Okay. I was looking at that as the change of my expectational order flow. We see that price grabs any liquidity resting above this area. If we look to the left, let's see if we actually grab any type of liquidity here. I don't believe we do. So price can definitely push back into this zone for sure to grab the liquidity resting above this area. mitigate something over here. All right, so we still have room to actually push to the upside within that area. This really wouldn't be a point of interest that I would look for price to trade from later on, right? Like as you guys can see here, okay, price trades back into this area and we don't get a reaction that ends up breaking structure, right? We do get a reaction to the downside. Let's see. Price difference wise, we had around, so 0.18% change of price, and then it looks like we're starting to push to the upside now during Asia session. But anyway, so I really wouldn't look for this as a liquidity point of interest. I mean, we did collect liquidity above these wicks here, but remember this was all just news right here. This was all simply just news. So with that being said, possible entry right here that you could have taken, okay? I know some of my students did. You guys sent me those setups. Fantastic, fantastic, fantastic. So that was around a 10.5% trade, risking 1% of your account. And I get a lot of questions about my stop loss, right? So in this case, right, my stop loss was 3 pips. Now to cover this range, right, to cover the supply that was responsible for the failure of this demand at the supply level, and simply all we're using is time frame correlation. We're correlating all the time frames together, and then we're able to use them for our benefit. But you see how, you know, to cover this high, we have to risk around 2.4 pips. Well, in my eyes, it just makes sense to use a whole number. So we just increase that to around 3 pips, and then we can see that price, you know, starts to push to the downside, right? So this was around 10.5%, so not bad. And our target is simply just the M15. You guys can simply just target your next supply or demand zone. All right. My main target, swing lows. You guys know I love to target swing lows. So my main target would have been here. Next target would have been down here. Or you can simply just target, you know, your next supply or demand zone, right? So the next demand zone would be here. And of course, we talked about this on the New York live session, but of course you have inducement here for price to actually run lower. We were looking to buy off of this area here, right? But price just reacted so quickly, and you know, it just never came back down to my my buy opportunity, and we would have been looking to take profit here and here. All right, so it looks, we should see price continue to push to the upside, honestly. So yeah, so now let's go over the second entry. Second entry was not too far-fetched from the first one. I hope you guys are seeing that my entries look the exact same. Please, please, please study the videos, study the trade breakdowns, because that's going to assist you with being able to do all of this yourself. Let's actually change this back to, I'm thinking about changing some of my settings for things, but I think I like, maybe I'll like this. Let's see. Yeah, I think I like this now. So now we'll change this right here. Okay, so on the M5 time frame, we had our change of expectational order flow once price pushed to the downside here, taking out, really? Yeah, you could say this area here. Taking out this low here. Okay, we run on these highs, collect liquidity above these highs, which gave us enough momentum to actually push to the downside. Now we did react to this demand zone, so you guys see how price rejects this demand zone and then finally pushes through, and price trades right back to this demand zone. So this was the confirmation entry for the sell, okay? But like I said, I was looking to buy, like that was my entire idea off of this area that we talked about during London session, or New York session, excuse me. We talked about buying off of this demand here. So we can see price literally taps into this demand and then pushes to the upside, taps into both of our points of interest, and then pushes to the upside. But like I said, guys, if I don't get an entry opportunity, if price does not give me an entry, then I simply will just sit on my hands, right? You have to be a disciplined trader, right? It is so important that you're a disciplined trader. Trading counter trend moves are out of my trading plan, so that's why I did not send this trade to the Telegram channel, because I only send setups that are a part of my trading plan, right? And those setups that are a part of my trading plan is what equals, you know, week in and week out, even if it's just 5%. I think this week we're only up 5.85%, but that's still 5%. If you can, you know, all you need is 10% per month, guys. That's really all you need. So if your focus is 5% per week, you're going to be hitting, you know, 15 to 20% per month. Okay, if we include some losses in there, so between 15 and 20%, that is fantastic. All right, that's absolutely fantastic. It's 240% a year. That's how you have to look at trading. Can't look at trading as, oh, I'm only up 1% this week. That's 1% that you didn't have the previous week, right? So we're up 5.85%, so around 6% this week so far. You know, this could have been a banger trade. This could have put us definitely in, you know, double digits, but it's completely fine. It happens. No entry was given, so no entry was taken. So here we have 10.5%. Here we have 12.85%. Let's see, let's do the calculation. All right, so that's 23.35% counter trend trading this morning on EURUSD. Fantastic. Like I said, I really wasn't a fan of this first entry here, okay, but this second entry was absolutely gorgeous. But once again, it was counter trend, so those are some things that you guys have to keep in mind for sure. All right. So with that being said, this is your boy Trillionaire Mac. If you guys have any questions, as always, feel free to contact me. All right, I have a lot of DMs. I will be trying to respond to all of my DMs from this week tomorrow. All right. If you're looking to become a more efficient and more effective trader, feel free to check out the links in the description and join Trillionaire Mac Trades Telegram channel if you want to take advantage of my setups. You know, before they actually go through. All right, be sure to subscribe to the YouTube channel. We will be doing $100 crypto giveaways starting next week. All right, now that we're done with live trading with Trillionaire Mac, we will start that on next week, doing the $100 crypto giveaways. All right, a lot of you guys have entered those giveaways from previous videos, and we've actually, you know, reached out to more of you guys to give away those $100 worth of cryptocurrency. So thank you guys for hanging in there. Thank you guys for supporting the channel. And to those people who have won the $100 giveaways, even though, you know, those videos are weeks old, congrats to you guys. Hope you guys enjoy it. I would suggest just holding it and then seeing what takes place. But with that being said, this is your boy Trillionaire Mac. I'll catch you guys on the next video. Much love. Peace out.